Hello, this is the tradesight Stocks and Futures Index Preview and Roadmap for the week beginning Monday, March 11th, ending Friday, March 15th, 2013. Hope you had a good trading week. Here's a look at the S&P daily chart to start with. We've been tracking this carefully because we wanted to get a 13 seeker signal, sell signal, on the daily chart basis, and we did get that on Thursday, as you can see the 13 right up here. And we've been talking about this for a while, that we felt that that one would be a lot more important to the market than the one that occurred right as the market was breaking out back at the beginning of January, which had a lot of construction. Now we're a little more overextended, so we're trying to get this seeker sell signal. Typically, if you get two back-to-back like that, the second one's much more productive. So we've got a risk line now that's this pink line right up here, and that's the area we'll be watching. See if we get the rollover somewhere between here and there in the market. Obviously, you need to actually get the rollover before you, and confirm that before you really start to head down and get yourself playing on the short side. But what's conflicting about all this is that if we switch to the weekly chart, we've been talking about the weekly chart throwing a 13 sell signal a couple weeks ago. And let me zoom in on this, right? So here's where it was, and then we get a risk line. We had 1 week that we used it as resistance, 1 week that we got above it and failed, another week where we used it as resistance. And we're looking at this week where we had gotten back above it, but maybe we'd sell off Friday and close back underneath it. That did not happen. On top of that, you've got a 9-bar setup again, which is sort of another pause point. So the S&P continues to trot on. This is always the difficulty with looking for turning points in the market. We can do our analysis, but at the end of the day, you just trade what the market's actually doing every day. Keeps you focused on market directional, and that helps you take better trades. And so again, this market's making new highs for the period, and on a weekly basis, it's ignoring. We're now getting confirmation and ignoring this risk line. Technically speaking, you've closed above it, so you just need any trade above the high of this week, and that risk line is blown away. Also, keep in mind what we always talk about, which is that when these risk lines exist, when they get broken quickly, it usually leads to a big move in that direction. So now we've got conflicting information potentially here, as the risk line on the weekly chart, which is obviously the bigger time frame, breaking so fast might suggest a bigger move upward in the market. And of course, a lot of this is going to come down to the sequester. Obviously, the market was very light this week. I'm going to show you. I'm going to zoom into just the 10-minute chart and kind of give you the look of the week here. Okay, this is Friday, Thursday, Wednesday. Okay, here it is basically. So Monday, we had a fairly flat day, a little push up in the afternoon. Tuesday basically got a big gap up in the market, and once that kind of settled down, we fell into this basically Tuesday, Wednesday, and Thursday, a 5-point range on the S&P. I mean, impossible to trade from a futures perspective, obviously, when you're so narrow on the indices, and not real exciting for stocks either, although we did have some nice stock trades in there. But one of the things about this was that Thursday was the quarterly options contract roll from the going into the M contract from the H contract for 2013. And usually when that happens, the technical players back off because it takes a while for the volume to move into the new contract, which is what you need for the technical aspects to trade properly. So we saw a very light volume day on Thursday, and it was only 1.5 billion on the NASDAQ on Friday, which is also light. But we did get at least a little movement on Friday. We sort of gapped up, filled the gap quickly, and then surprisingly made it back up to new highs for the close there. So a positive week overall in the market, but man, from a trading perspective, you basically spent 3 days in a 5-point range on the S&P. That is not what you like to see. So hopefully we'll get something a little bit more exciting this week. And this week, things to look ahead to, and I'm going to go through the economic data that's coming out. But the big thing this week, of course, is that we've got triple options expiration. So you've got stocks, futures, and commodities all expiring on Friday. Friday of expiration itself is usually quite dull, but the Wednesday of options expiration week is where we often see the options unraveling move, and that makes Wednesday the most likely day to see big range in the market. So let's take a look now at the economic data that is coming out this week. And what you see is we have absolutely nothing due on Monday. On Tuesday, the only real data point is the Treasury budget number at 2 p.m. Eastern Time. Not a big deal to the market. Wednesday, MBA mortgage index, retail sales, import-export prices, business inventories, crude oil inventories. Thursday, we've got initial and continuing jobless claims. The PPI expected at 0.8, maybe 0.7, somewhere in there for the total number, although the core only up 0.2. Current account balance and natural gas inventories. And then on Friday, the CPI, that's a pretty big number, expected around 0.5, 0.6. although the core CPI again just 0.2. Empire Manufacturing, net long-term tick flows, industrial production and capacity utilization, those can be important numbers. That's before the bell by 15 minutes. And Michigan sentiment. Also this weekend is the time change here in the U.S., so everybody's going to be shifting that. It means I have to get up an hour earlier here in Arizona, where we don't do anything about the time change. Hopefully a good week ahead. We had some nice stock clicks this last week. Forex stuff was all right. Futures was pretty dull because the ranges were so narrow for 3 of those days. But if we can get some volume back in the market now that the contracts rolled, to get some excitement off of the actual unraveling of the options before expiration, and looking at some of these key numbers that are coming out in the back end of the week, hopefully this will be a better week. Friday's probably not going to be great, but everything else has the potential. Certainly Tuesday, Wednesday, and Thursday, the usual institutional trading days of the week, will be the ones that we are the most focused on.